All right, finally, it's time to talk about the fire insurance. This article basically shares how to check whether your insurance is covering the wildfire damages and if you're not covered, what you can do about it. Welcome back to my podcast. This is Shawn, the Realtor guy, if we haven't met, from Portland, Oregon. It says most homeowners insurance policies cover fire and smoke damage, but some insurers may limit or not offer coverage if your risk is higher. So you should contact an insurance agent or broker if you need a separate fire insurance and have questions. And it says, does my homeowner's insurance cover wildfire damage? It said, standard homeowners insurance typically covers structure of your home, other structures on your property like shed and detached garage, and your personal belongings in the event of fire damage. That includes fire caused by candles, grease, electrical malfunction, faulty wiring, wildfires, and lightning. However, a standard policy may not cover all fire damages, including fire damages caused by nuclear hazards, arsons, poor maintenance, or regular wear and tear. Now, this is where it can kind of get gray zone here. So it says, please contact your insurance agent if you have any questions. So it's kind of like gray zone. The key point here is, what if my policy doesn't cover fire damage or I cannot obtain coverage due to wildfires? It says, similar to flood insurance, some private insurance companies may exclude or not provide insurance coverage in high risk areas. It is important to shop around as some insurers may have more risk tolerance than others. For example, some insurers may have none admitted, meaning it is not licensed by the state, but still can legally provide coverage, including for difference in condition and to help address any coverage gaps. These surplus lines, so these are called the surplus lines insurance. Brokers specialize in risks that admitted carriers will not cover. So these surplus line brokers can cover the admitted insurers where they don't cover. So, however, while offering specialized coverage, these companies are not, these companies are subject to different regulations and don't participate in the state insurance guarantee funds, which protects against insolvency. Insolvency meaning like insurance company going out of, going to bankrupt. So it is important to ask questions and read the fine prints. To find a surplus lines broker, you may contact your state insurance department or your current insurance agent, who may be able to refer you to a surplus line broker who specializes in your specific needs. Surplus line broker is the key term that you should remember and search for it if you don't have certain coverages. And it says, what do I do if my home is deemed ineligible for fire damage coverage? Some insurance companies may not cover damage caused by a fire if they consider your area to be high risk based on fire maps or risk scores. If your insurance company deems your home to be in a high risk area, these are some things you can do to help manage the costs. This includes contacting an insurance professionals to discuss your insurance costs and needs, gathering and comparing quotes from multiple insurers, including surplus lines, and obtaining wildfire-prepared certification from an organization like the Institute for Building and Home Safety. You may also contact your state insurance commissioner, who regulates the insurance companies in your state and may have an additional information about fire insurance and risk maps. So there's a couple steps that you may have to do, but I think it's important to contact your, local state, talk to a local insurance agents, as well as contacting places like the Institute for Building and Home Safety to get the prepared certifications, and talking to a surplus line insurance brokers. And there's something called the what is a fair plan, FAIR plan. If fire insurance is not covered in your policy, you may consider purchasing a fair access to insurance requirements. It's a short FAIR insurance policy. Fair access to insurance requirement insurance policy. It's a long one, but fair insurance plans are available in many states and are intended to protect high risk homes that don't qualify for certain types of insurance on the private market. While fair plans are typically more expensive and have limited protections compared to private insurance, they can serve as a crucial safety net for those who cannot find insurance elsewhere. So right now in California, there are a bunch of wildfires. I just saw one other fire that just started. I forget where it's at, but it's 0% contained, meaning it's going to burn for next so many more days. In Oregon, we have a lot of trees too, so we have some wildfire risks as well. The one big wildfire that I remember was near Mount Hood. This was about 4 or 5 years ago. A teenager kid, I think he filmed doing this, playing with like one of those fireworks, and he ended up getting punished for that. But it was about a week worth of burning near Mount Hood. But I haven't seen anything in residential on the west side. But I think this might be the time to kind of look into the homeowners insurance if you live in Oregon or anywhere with high risk wildfire risks, and make sure to have some of this surplus line insurance or fair access to insurance requirement, FAIR, fair insurance policy, and talk to your state insurance commissioner, and as well as like the maps, the wildfire risk maps and the risk scores, that type of thing. So hope that this give you some information about the wildfire coverage, the homeowners insurance coverage, because I feel so bad for those homeowners in California dropped by the insurance company on the wildfire like a few months before this wildfire, which is just mind-boggling to think about even. But I hope this helps, and be well, and I'll see you on the next video. Thanks so much for watching.